Tax Minute. This is Tony Novak here to discuss a few ideas for staying out of tax trouble. Today's topic is the importance of a tax clearance certificate. Now, this is particularly applies to small businesses, which of course is my most common focus. So we normally talk about forming entities, new businesses, LLCs, and corporations for the purpose of protecting ourselves, but we very seldom discuss closing those businesses for the purpose of protecting ourselves, and that is equally important. So when there is a business sale, let's say you formed an LLC to own a property, and that property has now been sold, and it's time to close that business, close that LLC with the state, terminate its business registration. We also want to apply for a tax clearance certificate, which simply means that the state cannot go after you anymore for future taxes. Now, while the IRS does in some cases issue tax clearance certificates, that's not the normal way to establish the end of your tax liability for federal tax purposes. And that's a more complicated topic. There are statute of limitations and other issues, pass-through issues that would complicate that discussion for IRS. So we're primarily talking about state government, and we're primarily talking about the finalization, whether you sold a property or gotten out of a business or closed the business, and particularly selling the business. So then let me just close with this one last warning. So if you wind up as the owner of a business where a tax clearance certificate was not issued at the time you took over, I would say your chances are better than not that you're going to hear from the state at some point about a tax that the old owner didn't take care of. It just seems to be one of those Murphy's Law type of things. All right, thanks for listening today. I'd love to hear your thoughts or concerns or discussion or feedback. I'm easy to reach at Taxproblems.CPA, and I will be back tomorrow with another Tax Minute.